Okay, welcome to part two. We've got Apple. As you know, I sold 50% of it because the monthly moving average, convergence, divergence, the MACD moved below its own moving average. So got rid of half the position. Now, could that resume up? Of course it could, but we'll wait and see. I continue holding the other half. Alphabet, I continue holding is all I'm going to say. The rest of the analysis is there. Microsoft, as I said, I got out of, not because it had fallen steeply from there, which is one exit mechanism, not because the moving average fell, sorry, the MACD fell below its own moving average, as was the case there for a steep decline, but because given I'd bought it in January 2023, given the size of those gains, given the 2 times ETF positions leverage that my wife and son had in their ISAs, it just did not make sense. Having so much money in one stock where even a 1% drop in the value of Microsoft meant a significant change in situation there. Okay, so that's why, and I know it could just do this and then go back. Well, I can get back in if it repeats that scenario. And how will I know that's the case? Well, you'll watch my weekly broadcast, won't you? But for now, this looks like it's going to be a scenario like that, which means the weekly is falling, the monthly is either rising or sideways. Well, it's not even rising, it's sideways and may even fall in the case of the monthly. So this will have a short-term fall. It's a dip, right? So you can either wait the dip out if you're already holding. If, like me, you think, right, I've got a lot of exposure, then you might sell and not ride the dip. Or if you've got fresh capital, you could always buy the dip later. All right. And the telling thing will be when the weekly actually starts moving up. Amazon, I still hold. The analysis is on the private Telegram channel for Great Investment members only. Disney, like so many of the stocks, the monthly is rising, the weekly is falling, so you get short-term falls before longer-term rises like that. Okay, if you want to know what to expect in these things, and let me zoom in, what to expect when something like that happens, well, all you do is you look back at history and you say, well, actually, how deep was the drop in the past on a rising longer-term uptrend, and how many months did it take for it to go back to where it started, right? So it's called drawdown depth and duration, right? Duration is that period, depth is that. Duration is x-axis, depth is y-axis. Drawdown danger is depth and duration. And that will avoid any surprises. And if you don't like those kinds of dips, drawdown depth dip dangers, then don't buy Disney or stocks like it, right? Very simple. I've got more stocks coming up. Don't forget to look at the YouTube channel, my YouTube channel, which is pretty freaking amazing because it actually goes through so much educational material on IFAs and the like, and why you might want to be a bit worried about them. I'm trying to pull up the channel, your channel. Yay! There we go.
Are you making money on it at the moment?
And whoops, you'll be able to see Sally talking to it. No, let's put that on pause. And there we go. That's me talking oil to her on the beep. So don't forget that. Now let's go back to some of the other stocks. That's all on YouTube, and that's on alpeshpatel.com/links. Now let's get on to the other stuff. Nvidia, as I said, I got out of now. I thought I was going to wait till that dropped, say 15, 20% before I'd make a decision. As it transpired, those gains and what was happening with the S&P, I decided that actually I won't do that. Now you could, if you wished, and I will just exit now. That's not to say the company is expensive, because look, it's actually quite cheap. It's not to say it won't continue upwards. It was to say that having had it since then and made 481%, I never had leverage on Nvidia, sadly, 481%, I think it's time that my wife and son got to spend some of it. No, I think it's time to exit that. Okay, also because if that happens and this drops a little bit, then I can always get back in once it's stopped having those falls, which I talked about earlier. Not guaranteed to fall, but I can always get back in. Just like here, when I didn't get in, if I had, I could always have got back in. So that's that. Tesla is not a special situation yet like it was then. We got out in October of last year after that fall, after which it rose and then dropped. Why? Well, because the MACD monthly was below its moving average. And what we tend to do is we may well start off with, I want to show you something, a stock for whatever reason we've bought it, which will usually be value, growth, income, cash flow, and positive momentum. But the exit reason, very structured, the exit reason will be, time and again, will be because, let me just move that out, because either 12 months are up or it's fallen 25% from the peak, or you become risk averse because the moving average, for instance, has fallen below its own signal line in the case of the MACD, and that gives us a pretty good basis for quickly making decisions on these things. Okay, so Tesla, not yet, certainly may never be a special situation. Why would it be a special situation and not actually on the approved list? Well, because to be on the approved list, you've got to tick every box: value, growth, income, cash flow, Sortino, alpha. Whereas for it to be a special situation, it just has to tick value, growth, income, and high momentum, and it hasn't got those. Okay. Meta, as you know, got out of, but it's only going to be on great investments. The detail and the reasoning, and that was last week. I think I mentioned that on the public broadcast. On the webinar, I mentioned it on Wednesday's webinar. All right. NXP Semiconductor, yes, that is still, the monthly is up. This is sort of down, so it'll probably take a bit of time doing what it's done there, what it's done there before, and what it's done there. I'm not trading the investment, so it's just a case of continuing to hold. Similarly with Qualcomm, that's still in that direction, that's in that, so it'll have a crosswind for a while. It'll sort of do what it did here before continuing upwards is my anticipation. ServiceNow, I got rid of ages ago. It's on the Great Investments Program, but you'll know. Special situation, I don't need to talk about that in last year. Now, Netflix is not one I own like so many on here. It's a market update. So I started covering it from then, and I said to you, if it drops X, you'll want to sell Y. Well, it's starting to do that, and it's starting to look a lot like this period. Now, notice how there it went up and up and up. Everyone got greedy. It then dropped, and then it can drop off a cliff. So personally, if you're risk averse, you get the hell out of it now. Okay, if you are risk averse, you get out of it now. All right, I'm not saying that's necessarily the bit that's going to happen, but Netflix, if you're risk averse, now if you're risk loving, you might say, I'll wait till it drops 25% from the high since I bought it. So 25% from there, and then you'd get out, right? But if you're risk averse, you say, forget it, I'm getting out now. Okay, so you've learned something. PayPal, one of those popular bellwether stocks, which just shows that you can't just look at the technicals and the MACD and still going absolutely nowhere. One day it will indeed go up fourfold. That isn't now. Like I said, on YouTube, you'll see all of these funds that I've covered. Now, Super Micro, let's have a look at this. Similarly to Meta and Nvidia, if it drops X, you would sell Y. It's overbought. If you're risk averse, you'd get the hell out of it already. If you're more risk loving, you might say 50% if it drops 15%, and then the other 50% if it drops 25% from the high since you bought it. So that's how you decide that, because it's momentum. Goldman's I continue holding. And the idea there is the monthly's going up, but the weekly's going up. Okay, and it's not been 12 months, and it's not dropped 25% from the peak. So simple. Okay, simple. Similarly with General Electric, which I don't own, by the way. But it's been one of those which is, there we go. Yeah, I don't own, and it's popular with the hedge funds. And yeah, those are still going the same direction, but be limited by how much headroom there is. So you might say with this, well, if it drops 5%, I'll get the hell out of there. Cisco, another one out of the funds, and weekly is going that way, monthly is going that way. So for a while, it'll go sideways. Do have a look at those things as well. And as I said, the YouTube channel and LinkedIn, where you'll see an article that I've written about how do you find stocks which are less likely to dip sharply and more likely to rebound. LinkedIn is on alpeshpatel.com/links, and you'll see a bunch of wonderful reviews of the work that I've done as well. Similarly, if you look at this, you will learn loads. Thank you all very much. Thank you.